Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, Germany was worst performing major economy last year. As well as that, Houthi rebels hit US owned cargo ship off the Gulf of Aden. We've got lots to talk about in the charts also, with lots to talk about in the economic calendar as well. But we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about, of course, is Germany and them being the worst performing major economy last year. Now, rising interest rates, high inflation, and high energy costs caused the German economy to stagnate and even contract by 0.3% last year. This comes as recent data presents Germany as one of the world's weakest economic performers in the world. Now, of course, we've been staying on top of any news relating to the Eurozone economy as a whole. And with Germany being the biggest and most important economy of the Eurozone, we've been staying on top of their industry kind of specific issues and best performing kind of areas, since we kind of started these morning market briefings. And we've mainly been coming back to the issues within the German automobile industry. Now, of course, automobile manufacturing, it makes up a large part of German exports and production as a whole. We've just got numerous names to list off from, really, of significant and successful German car manufacturers. But ultimately, Germany has been suffering recently, not only as a result of the high interest rates which consumers and businesses within Germany will be experiencing, but also those rising energy prices as a result of Russia's invasion into Ukraine, the sanctions that have been implemented since. We know that Germany largely did rely on Russian imports of oil and gas up until Russia's invasion into Ukraine, and that was a large reason why Germany experienced such significant inflation during 2022, and ultimately has been weighing on their industrial production greatly. And this is what we're now seeing. And what will be interesting to see is how Germany will ultimately be able to respond to this with their changing kind of energy production industry, which will ultimately decide the future of these key manufacturing sectors and businesses within Germany. Germany is known for its manufacturing not only in automobiles but in other industries as well. And all of these industries, of course, will require a great deal of energy, and not being able to get that for as good a prices as you will be able to get it abroad will weigh on Germany's specialization and kind of efficiency. So ultimately, it'll be interesting to see how this will work out for Germany. But it does seem that the German economy did struggle last year, and as we do start off 2024 with a great deal of heightening world tensions and also issues within economies around the world, it'll be interesting to see how Germany can maybe recover from this in 2024. Now, the German economy, has also been troubled by industrial action, including nationwide train strikes and disruptive protests by farmers against cuts to fuel subsidies. And largely, we've been seeing these large projections of industrial action across Western Europe, really. I mean, we've been seeing it in the UK, France, and Germany as well. All of these nations of which have been dealing with high levels of inflation not seen for a very long time. So it's understandable to now see why there's such issues within, the pay, the kind of labour markets, where, certain state-owned industries are seeing their workers call for higher pay rises, and ultimately the government's not being able to fulfill on that, because ultimately they've taken up a large amount of debt during that lockdown period over the pandemic, where of course they required a great deal of government spending. So it will be interesting to see whether this industrial action will continue to affect these key Western European economies as we do go into 2024, as we do know that it has weighed on Germany and has caused Germany to actually contract. Germany's economy to contract over 2023. So keep your eyes on that most definitely. Now, the German Statistical Office said GDP was still above pre-pandemic levels, with it currently being up 0.7% from 2019. Sorry, pardon me. Now, of course, that's still a kind of a rise of something, but ultimately that's not a significant increase, of course, over that many years. And so, it's hard to really paint a positive picture here when ultimately we're seeing contractions, following the pandemic, and ultimately not much growth at all. Now, Eurozone industrial production, however, fell for the third consecutive month in November, with these figures coupled with those in Germany pointing to a likely contraction in the Eurozone's fourth quarter of 2023. According to the IMF, this data makes Germany the worst performing major economy, with the average growth seen in advanced economies being 1.5% during the year of 2023. The IMF predicts that the US economy grew 2.1% last year, with the Eurozone also growing 0.7% and the UK 0.5%. So clearly, Germany isn't kind of fitting in with its competition, and ultimately, whilst the US was a global bright spot for economies around the world, the UK has outperformed Germany, and as well as the Eurozone as a whole has outperformed Germany, which of course Germany exists within. So that's interesting to note, of course. Overall, the data presents how much the loss of cheap Russian energy has hurt industries, with German retail sales, exports, and industrial production all falling last year. And I think something that's also going to be interesting to note is how this may affect German politics as we do approach federal elections, I believe, in 2024. I know kind of the more government-focused elections are more so in 2025, but that may change. So keep your eyes on German politics as well, as the economy will be affecting politics and politics will be affecting the economy. So keep your eyes on all things German at the moment. That's all to talk about on this article, though. Next article to talk about is the Houthi rebels, once again, which have hit a US-owned cargo ship off the Gulf of Aden. Now, the militant group backed by Iran, called the Houthis, hit a US-owned cargo ship yesterday. This was the first direct assault on a commercial vessel following coalition counter strikes. Of course, we've reported on those strikes by the US and UK, where we did see US fighter jets take off from US carrier ships and attack certain Houthi targets within Yemen, as well as the UK having their planes take off from Cyprus, refuel in the air, and strike targets in Yemen. And this was, a groundbreaking move, really, in kind of the world, on the world international stage, really, because of the fact that the US and UK have kind of withdrawn their GWAT kind of operations from Afghanistan, from Iraq over recent years, really, and this was kind of a strike once again back in the Middle East, and this time targeting the Houthi militant group, which has obviously been fighting in the Yemeni civil war since 2014. So that was something that was very interesting to note, and certainly raised world tensions, as we did see on gold, which did rise significantly following those strikes. And this is why we do keep coming back to these articles around world tensions, is because understanding how these strikes, these conflicts, and these kind of issues between nations affects the charts is so important, as assets such as gold, oil, and others heavily rely on world tensions and speculations around that. Now, this Houthi missile attack increases concerns that the Houthis are not scared by the US's and UK's warnings. The Houthis have already carried out 30 attacks on commercial vessels since November. The US and UK have responded with airstrikes against military infrastructure. However, the Houthis have vowed to respond aggressively and to continue targeting ships. with the Houthis firing an anti-ship missile, ballistic missile at a US-owned vessel yesterday, with its crew also reporting no serious damage. So, that's to be noted as well, that, we're not seeing any serious damage on these vessels. Luckily, no casualties arising from these missile attacks, but they're certainly affecting global trade greatly, as the risk of one of these taking out the crews or sinking a vessel is high, of course, and this is causing insurance costs for these vessels to rise dramatically and forcing many vessels to divert away from the usual route through the Red Sea and instead go around the length of Africa, which of course adds many days onto the shipping times and costs as well. Now, this was also the first time that a ship had been hit further south of the Red Sea, and this time in the Gulf of Aden. 2 hours earlier, US forces had detected another anti-ship missile which crashed on land. The frequency of these attacks has deterred vessels from using the Red Sea, which accounts for 15% of global seaborne trade. And so, pardon me, and of course, it's going to make up a much larger account of European trade as well, and that's something that's always important to know. This disruption, it risks raising energy prices further and thus adding to the already high inflation levels. And that's the key issue here, is that whether, if we do end up if we do end up seeing international shipping shut down through this Red Sea, Gulf of Aden route, then how might that affect inflation? If we are seeing a rise in prices of shipping costs, and we're not seeing as much shipping come through, maybe this will dramatically weigh on inflation, of course, which is already so high, as we did talk about in the first article. And concerns have been raised since the Houthis are a battle-hardened group which have fought against a Saudi-led coalition for 8 years and thus are unlikely to be deterred by strikes from the US and UK. So, what sort of conflict are we being drawn into here, and what may be the result? Ultimately, if international shipping does end up being shut down through the Gulf of Aden because these strikes do not work, this will have dramatic effects on the economies of Europe and others. And also, if these strikes, do continue, how might that affect world tensions? As of course, these Houthis are funded greatly by Iran, and thus, how might Iran continue to help these rebels in their fight and attacks against commercial vessels? So keep your eyes on this article, most definitely. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit to talk about. And to begin with, we are on the US 30 and talking about US indices. Now, of course, yesterday and ending off last week, price did come into contact on the US 30 into this significant liquidity zone and resistance level, which we have noted before as a key area where sellers may be positioned, but ultimately we didn't see enough momentum to break through that area, and instead we did see the expected sell-off from that zone, and currently we are sitting a bit lower than those levels, and we're kind of consolidating. So it'll be interesting to see how the US 30 may continue to move, and whether it will now make a step to the upside, or in fact it will just continue to kind of range around in this area that's been sitting in at its highs for quite some time now. So definitely keep your eyes on that. Next to talk about, though, is the dollar, which is an interesting position because, like the US 30 and like other pairs at the moment, the dollar has just been ranging around for the meantime. And this has been despite, of course, US inflation data and the NFP figures that we did receive. And, despite all of that, the dollar has, maintained a lack of momentum. Possibly this is because we're just starting off the new year and not much economic data has signaled much change to the Fed's monetary policy. So it will be interesting to see how the dollar does react to this liquidity zone, which once again it's coming into, and whether that will just continue to range around. So keep your eyes on the dollar. Staying on the topic of the dollar though, Euro USD is to note, and obviously mirroring the dollar, it is currently sitting on that key liquidity zone. We've been expecting some liquidity from these areas to be shown and some momentum to be seen as price does push away, but ultimately we haven't seen that recently, and price has just been consolidating and staying within this range. So we'll have to wait for some significant economic data before we see any moves. Next to talk about though is pound yen, which is in an interesting position, of course, because it has now reacted on the short term from that 50% Fibonacci mark. We were wondering whether price would come all the way down to react with that 61.80, but in fact it has not, and has just reacted to that 50%. So keep your eyes on pound yen. Next to talk about is Bitcoin, which of course has now reacted to that key liquidity zone and moved away to the upside. This obviously follows that significant sell-off that we have seen over the weekend following the SEC's decision to actually approve of Bitcoin ETFs. But it does seem that price was already inflated going into that decision, and so now we've seen price kind of equalize out and take a fall to the downside. So keep your eyes on Bitcoin, as we are now once again sitting within this kind of range that price was moving around in. Next to talk about though is gold, which obviously did move in a very bullish manner away from those liquidity levels following US-led strikes in Yemen, as well as the DPP, the Taiwanese party, winning in the Taiwan elections. And those two events have culminated in gold moving to the upside, as those two events did raise world tensions. Keep your eyes on gold though. Any US data will obviously push the gold one way or another, but ultimately the key thing for gold at the moment is those world tensions, which are very high. So keep your eyes on gold. Next to talk about, and lastly to talk about in the charts, is oil, of course, which has kind of failed to move lower, but is currently kind of making a move to the upside to maybe react with this liquidity and resistance level once again. So keep your eyes on that. That's all to talk about in the charts though. Next to talk about, of course, is the economic calendar, where we are getting a lot of data today, and very significant data indeed. So listen out for all this data that we will be getting. So to begin with, we will be getting German inflation figures and Italian inflation figure. As well as that, we are getting British unemployment rate and the Eurozone and Eurozone and German economic sentiment figure. So lots of Eurozone and German data today. So as that, we'll be getting the Canadian inflation rate figure. So listen out for that one for sure, along with the Bank of England's Governor Bailey's speech. Always important to hear from him, to hear how he views the British monetary policy. Of course, he leads it, so understanding his perspective is so important. And finally, we'll be having one Fed official also speaking today to listen out for. That's all to talk about in the charts though, and the economic calendar and articles. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. But that's all from us at Wildwood Capital. I hope you have a great trading day this Tuesday. Have a great one. See you later.